Good morning everyone. I hope everybody is having a good week. This is your market update. US stocks stumbled Tuesday, giving up modest gains at the start of the trading in a sell-off that picked up momentum in the afternoon. Stocks stumbled as the country's top infectious disease official warned against a premature reopening, and Fed officials underscored the dire state of the economy. So all 11 sectors of the S&P 500 were lower for the day. The big drags in terms of sector performance was real estate, which was down 4.25%. Energy, financials, industrials, and consumer discretionary were also down about 2%. Information technology was also down about 2.14%. So S&P closed 2.05% lower. The Nasdaq also was down 2.06%. The Dow Jones was down 1.89%. Oil advanced about $25 a barrel. Gold climbed as well, holding on to the 1700 handle. The Nikkei futures are down and the Hang is pointing up. US futures are pointing to another 2.5% decline. This is as I see the price action now. Anthony Fauci told lawmakers that he is concerned about cities and states reopening without reaching checkpoints outlined by the administration in guidelines to help them decide when it is safe. He mentioned that I feel if that occurs, there is a real risk that you'll trigger an outbreak that you might not be able to control. The call for caution runs up against President Trump's wish to reopen the country for business and ease restrictions that have really crushed the economy. Staying with Mr. Trump, Trump renewed his push for negative rates as Fed officials continue to brush the idea aside. As long as other countries are receiving the benefit of negative rates, the US should also accept the gift, he tweeted. So Dallas President Robert Kaplan told CNN he is against it. St. Louis's James Bullard reiterated his skepticism. Minneapolis Neil Kashkari also said that there are other tools that we should use first. Remember earlier, two of their other colleagues also made similar comments. US posted a record $737.9 billion deficit in April thanks to the pandemic relief efforts. So government spending rose 161% on the year, while the receipts fell about 55%. In India, India is planning to spend about 10% of GDP to help jumpstart its lockdown economy. The finance minister is looking to give the details starting from today. The total spend would be about 20 trillion rupees, which is about 265 billion, which is what Mr. Modi said in a televised address. In China, the PPI index came through, which is a gauge for factory gate prices. It fell deeper into deflation in April as pandemic crimped demand at home and abroad. So China PPI numbers on a year-on-year basis came in at a negative 3.1%. The forecast was for a negative 2.6%. Couple of equity news before we look at what earnings that we can look forward to. Anil Agarwal plans to take Vedanta private. The billionaire is proposing a price of about 87.5 rupees a share to buy the 49.9% stake. So in terms of premium over Monday's close, that would be about a 10% premium, 9.9 to be precise. Kotak Mahindra Bank has also arranged or selected the bankers that they'll be working with for a planned share sale, which will be worth about $1 billion. Earnings that we will be looking forward to would be Tencent and Sony. Rakuten also would be reporting. Cisco and ABN AMRO is something that we will be looking forward to later today. In terms of rates, the 3-month LIBOR slide continues. The 17th straight session where we have seen the 3-month LIBOR come down. It closed at 0.4240, which is a fall about 0.1 basis point. The lowering of the spread over the swaps is also a sign of easing funding pressure. So one is the LIBOR's sustained drop, and also the narrowing gap of the LIBOR to the OIS, which is the overnight index swap, which is the spread has shrunk to about 37 basis point from the March peak of about 138 basis points. So all signs that the funding in the market is pretty easy and functioning well. But Morgan Stanley's analyst warned against a further contraction, or he said that it might prove to be challenging because one is commercial paper supply, as I mentioned to you yesterday, is coming back into the market, but also the big treasury bill that is going to flood into the market to fund the deficits that we had spoken about a bit earlier. Moving on to Forex, the US dollar traded lower against all the major currencies on Tuesday on the back of the steepest decline in consumer prices ever. So yesterday, inflation numbers came through. The CPI fell 0.8% in negative territory in the month of April, which was right in line with expectations. However, the food and energy costs, the CPI growth fell 0.4% versus a forecast of negative 0.2%. The big focus, however, is going to be what we will be looking forward to, or we'll be looking forward to what the Federal Reserve Chairman Powell is going to speak later 9 p.m. Singapore time. We'll be eager to listen to Powell's view on negative interest rates. Now, remember, Fed Presidents Bostic, Kaplan, Bullard, and even all have said that they're not a fan of negative rates and do not think that it's a good option for the US. UK will be looking forward to the first quarter GDP numbers. GBP has been against the US dollar has been range bound in terms of trading. This is a number that we should be looking forward to. The expectation is for the steepest quarterly contraction in 45 years. Reserve Bank of New Zealand will also be coming through in terms of policy announcement. The big question is whether they will ease or not. On the 20th of April, RBNZ Governor Orr said that negative interest rates are not ruled out, and they will be thinking about additional stimulus in May. So that is something that we should look forward to. That is your market update, and stay safe and healthy, everyone, and I'll speak to you tomorrow.